Paul, no jobs added to the U.S. economy last month. Does this maybe confirm some of the fears I heard about double dip, about recession in the U.S.?
Well, I think there's still some signs that spending is still holding up surprisingly well, despite all the doom and gloom. We've seen auto sales still pretty firm through August. Chain store sales through August have been pretty good right up to Hurricane Irene. Certainly the concern, though, is that the adverse readings on confidence sort of feed back into the consumer. The saving rate could go up further from here, and that could be a real problem in terms of the dangers for a recession. But at the moment, I think the economy's still growing, but obviously at a very tepid pace.
Yeah, very tepid pace. We're looking at, 0.4% GDP growth in the U.S. in the first quarter, 1% in the second quarter. So do you agree with L. Arian at PIMCO saying that there's a 1/3 chance of a double dip, 0.5% chance, 50-50 in Europe?
Yeah, broadly speaking, I think I'd agree. Our core view is that the US doesn't go into recession, but that requires a number of things, including further action from the Fed, which I think, broadly speaking, the Fed chairman has indicated that the Fed is prepared to do more. But it also, I think, is going to require clear signs from Congress that there is bipartisan support for whatever President Obama talks about later this week.
So, Paul, are you saying that the QE3 is baked into the markets already?
I think that the likelihood of QE3 is still some way off. I think there's other things that the Fed will look at before QE3. For example, lengthening the duration of its portfolio. It'll continue to give guidance on that there is no change to interest rates for an extremely extended period. But I think in terms of QE3, I think that's still some way off.
All right, so you're expecting some sort of stimulus from the Fed. You're expecting slowing growth, but still growth in the U.S. and Europe. What does this all mean for the Asia-Pacific, considering you're seeing manufacturing slowing down in big parts of the region that includes in South Korea, in Taiwan, in Japan?
Well, certainly, those economies that are highly leveraged to the US, they will slow more, and there's more downside risk there. Our economists have already lowered their forecasts at the margin in India and China. So I think the outlook, broadly speaking, in Asia is that central banks are now on hold. We'd previously thought that central banks could be actually raising interest rates in Asia because of the inflation problems, but that's now all been put on hold. So I think the outlook in Asia is for slowing growth, but in the big economies such as particularly China, our economists still believe that growth can remain relatively strong. This week we've got a range of figures in China. We think that inflation will be peaking, and that does allow some scope for the central bank in China to leave interest rates on hold, given that growth is slowing. We think that, for example, industrial production growth, retail sales, exports, fixed asset investment will all slow this month, but still overall remain at a fairly strong pace relative, for example, to Europe and the US.